You're probably aware that taxes can be complex and costly, but did you know that the average American loses over $3,000 annually to taxes they shouldn't be paying? That's because many people are missing out on a simple yet powerful strategy called tax loss harvesting, which can help you save thousands on your taxes legally. Tax loss harvesting is all about selling investments that have declined in value, so you can offset the capital gains you've made from other investments. This sounds complicated, but it's actually quite straightforward. Imagine you have a portfolio with a mix of winning and losing stocks. By selling the losing stocks, you can use those losses to harvest tax savings from your gains. Let's look at an example. Suppose you invested $10,000 in a stock that increased to $15,000, making a $5,000 gain. If you sell another stock for $5,000 loss, you can use that loss to offset the gain from the other stock. This means you'll only pay taxes on $2,500 of gain, saving you $1,000